take the necessary action as soon as the opportunity presents itself. So we'll be working with, let's say, the 4 hour in this case, right? We'll be looking at the 4 hour. And the second element of the strategy that we're going to be using is the Bollinger Band. I'm not quite certain if everyone here is familiar with the Bollinger Band, right? But you can just use the normal default settings. Right? I will give some later settings or some settings a bit later on for increased accuracy, especially on the shorter time frames. But for the sake of having frequent trades, right, because the more fine-tuned the Bollinger Band is, the less trades it's going to take, but the more accurate it's going to be. Right? Does that make sense? So for now, we'll just use default settings. I'll just increase the thickness of the Bollinger Band themselves, and it does look freaky, but I'm hoping everyone can make out. Right, now let me just rather change it. Okay, let's just go to second one. Okay, now let me just use no more. All right, I think the black is the problem. Doesn't seem to be going well with this template. But in any case, now the first part of the actual chart reading is what's called candle counting. Right? Candle counting is you count the amount of closes or candles that close in the red. Right? So if you're looking for example, you will take this. Boom, right? That is 1, 2, 3, 4 candles. Right? So that is candle counting. So you want consecutive candles that are the same color, which means or they are down. Right? So they're bullish or they bearish. Same situation here, but on the opposite end. 1, 2, 3, 4, 5. Okay. So that is essentially what candle counting does. And then when you combine it with the Bollinger Band, we get the strategy. And obviously there's going to be nuances to when you can enter and how you can exit, right? The best exit strategy. But for now, the main focus is just you need to know how to count candles properly, right? And then sort of like take it from there. Now, with the candle counting, you're looking at because we're looking for a reversal, right? We're looking at buying opportunity. What we want to have is we want to see a downward push, right? Remember, most of the time the market is on an upward trend, right? But you do get aggressive pushes to the downside. So what we want to do is to catch those reversals outside the Bollinger Band. Okay. What we're essentially looking for is something like this, right? And something like that. That's what we're looking for. Right? Those slow moves to the upside after that aggressive push to the downside. Does that make sense? Okay, all right. So what you want to do is to be able to count 3 consecutive red candles that actually close outside the Bollinger Band. So this would be the perfect example of what we're looking for. This is a close outside the Bollinger Band, right? This is a close, the candle closed outside the Bollinger Band as well, and this is a close outside the Bollinger Band. So if you have 3 consecutive closes outside the Bollinger Band, red candles, then you can go long, boom. Right, does that make sense? So you're looking for 3 closes outside the Bollinger Band, red candles, and obviously we are predominantly, or we 100% long on the index. And now this can work on the UK 100, you can use it on the German DAX, NASDAQ, Dow Jones, whatever the case may be, as long as you filter out your trades. Okay, as long as you filter out your trades. Now, once you're done, as soon as this candle closes, that's where your entry is, right? You don't wait for the return candle to the upside, like we usually do in most instances. we wait for that close of the third candle, right? And you're in. Right. I trust that makes sense. So once you go in, right, once you enter this trade, you obviously have to be able to set your stops and set your take profits as well. Okay. Now, this really doesn't matter on which time frame you're essentially looking at it, okay? Because what you can do is, if your stop is going to be, let's say, 50 points, normally it's going to be 50 points, then you're going to times that 50 points. Let's say you're looking at this on the 1 hour, right? And then you want to sort of like throw it on to the 4 hour. Now you're consistent on the 1 hour, you're hitting the numbers, but now you want to use the same strategy on the 4 hour time frame as well. What you can do is to simply take that 1 hour, right, at 1 and multiply it by 4. So if your stop was, let's say, 25 pips, or let's say 20 pips, and then you multiply that by 4, you get 80 points, basically. Okay, so that will be your new stop. So on a 4 hour chart right now, we have a stop of 100 points. All right, so let me just clear this. Okay, so your stop is 100 points, 100 points. So that is where your stop is, going to be at 71.68 rather. 71.68 is where your stop loss is going to be. Okay. Right. I do hope that makes sense. Now, your first take profit then will be at 20 points. Okay. Well, let's just say 20 pips to avoid confusing guys. 20 pips. Right. So boom, the head is there. Now, if you're looking at this, all right, if you're looking at this and you're feeling like, okay, the stop loss is a bit wide, but the take profit is a bit small, this is, you remember I said that is your first take profit. Okay, so the 20 points is your first take profit, meaning you will place 2 orders at the same level. All right, so you will place 2 orders at the exact same level. So if you're normally going to be trading, let's say, 1 standard contract, you will divide that 1 standard contract by 2 and you'll get 0.50. So you'll trade 2 0.50s right at 72.77, which is your entry point. And then you will let the market hit your first take profit, which is about 20 points. And then you will let the second trade run. Right. So now, where would you let the second trade run to? Now, there are 2 exit rules that you can take. Now, the first one